AML Audit Step 8 Internal Controls and Governance. Evaluating the internal controls and governance structure related to AML compliance is a critical aspect of an anti-money laundering (AML) audit. Strong internal controls and effective governance are essential for ensuring that the organization's AML program operates efficiently, with appropriate oversight and accountability. Here are the key steps to evaluate these aspects. 1. AML Governance Framework. Review the organization's AML Governance Framework, which includes the structure of AML committees, roles and responsibilities, and reporting lines. 2. Board Oversight. Assess the level of involvement and oversight of the Board of Directors in AML compliance. The board should be actively engaged in setting AML policies and risk appetite. 3. AML Compliance Officer. Evaluate the authority, independence, and resources available to the designated AML Compliance Officer. This individual should have the necessary expertise and direct access to senior management and the board. 4. AML Policies and Procedures Approval. Verify that AML policies and procedures are approved by the appropriate level of management or the board, and that they are effectively communicated throughout the organization. 5. Risk-based approach. Assess whether the organization's AML program follows a risk-based approach, with controls tailored to address the specific money laundering risks it faces. 6. Segregation of Duties. Ensure that there is an appropriate segregation of duties within the AML compliance function to prevent conflicts of interest and ensure checks and balances. 7. Internal Reporting and Escalation. Evaluate the procedures for internal reporting and escalation of AML-related issues, ensuring that they are clear and that there are defined lines of communication. 8. Quality Assurance and Independent Testing. Determine if the organization conducts periodic quality assurance reviews and independent testing of the AML program to validate its effectiveness. 9. Training and Awareness. Assess whether employees, including senior management and the board, receive regular training and are aware of their roles and responsibilities in AML compliance. 10. Record keeping and documentation. Verify that the organization maintains comprehensive records of AML-related activities, including meeting minutes, decisions taken, and actions implemented. 11. Monitoring and reporting mechanisms. Evaluate the effectiveness of monitoring mechanisms for AML compliance, including reporting on key AML metrics and indicators to senior management and the board. 12. Internal audit involvement. Determine the extent of involvement of the internal audit function in reviewing AML controls and processes. 13. Remediation and Follow-Up. Check if there is a process for identifying and addressing AML compliance deficiencies, with a follow-up on the implementation of corrective actions. By thoroughly evaluating the internal controls and governance structure related to AML compliance, auditors can determine whether there is sufficient oversight and accountability in place to effectively combat money laundering and other financial crimes. A well-structured governance framework and robust internal controls contribute significantly to the organization's ability to maintain a strong AML program and protect against potential risks.